Today, I'm very pleased to be joined by two industry leaders, Carl Chong, Head of ETFs at First Trust Canada, and Mark Fatadad, Director and PM at Jarislowsky Fraser. This duo launched their first ETFs in the ESG space on NIA back in March, covering the equity and fixed income space. Carl, maybe turn the stage to you for a very quick introduction on you, the role, and the First Trust team for our viewers.
Thank you so much, Eric, and thank you for having us join us here today. So, as Eric just mentioned, I help lead the First Trust Canadian ETF business. I've done so since inception here in Canada in 2013. I also oversee a group of investment professionals that deliver ETF solutions and to investment advisors, portfolio managers, and institutions. As a firm overall, in case some of you are not familiar with First Trust, we're a privately held asset manager. We started the company in 1991 out of Wheaton, Illinois. We now have over 200 billion in AUM, which is an all-time high for us. In our ETF business across our complex, we have seen tremendous growth. We're now at close to 136 billion. So that makes us one of the top 10 largest providers globally. And that's really just a testament to all the work and our effort the team has done throughout the pandemic, through timely research, business development strategies, and of course, relevant products, some that we'll talk here today.
Brilliant. Global powerhouse, and pleased to have you join us. Mark, welcome, same to you, and a new friend in the broader Canadian ETF journey, but obviously a part of a much broader and original, almost Canadian institution. If you could give our viewers a bit the same on your work and role within Jarislowsky and the broader firm, that'd be great.
Sure. So yeah, thanks again for having me, and we're delighted to be sort of marking this partnership with First Trust here today. Jarislowsky Fraser as a firm, has been around since 1955. Originally founded as a research boutique, but has grown today to manage over $58 billion on behalf of institutional and private clients, both in Canada and overseas. I think for the viewers, if there's sort of one thing that you really take away about Jarislowsky Fraser from today's call, it would be our brand promise, which is to deliver low risk growth of capital on behalf of our clients. And, to me, there's sort of three key things that really underpin that brand promise. And number one, it starts with that really strict adherence to a disciplined, quality focused investment philosophy that has really been proven for over 5 decades now. Number two is a team-based decision-making and collaborative culture with all of our investment research being done in-house. And then really the third thing would be sort of a deep ethos of stewardship and sustainability. So, we think like business owners. We make long-term investments in quality companies with sustainable competitive positions, and with a holding period that's on average in sort of the 7 to 10 year range.
Wow.
And then I guess just really briefly, my role is director and portfolio manager, institutional management, and I co-chair our sustainable investing committee, which is the part of the thrust for today's conversation.
Brilliant. Well, thank you again, and maybe a good segue on the heels of both of your intros to bring First Trust and Jarislowsky together to launch these first couple mandates. Carl, maybe turn the microphone over to you to give us a bit of a view on what brought you together, why it works, and kind of tied into the whole ESG space, something that's obviously become very popular as a bit of a marketing name these days, but obviously something you both believe in longer term.
And Eric, you had a huge part of this as well, providing the Eric introduction. So I also want to thank NEO for the partnerships and support. They had provided the introduction to JF, so this was all possible because you and your team there. So, but with First Trust, on the actively managed side, we have certainly carved out a great market share. Across our platform, we have 80 plus actively managed strategies with over 41 billion in AUM. So that makes us the second largest provider in the world offering actively managed ETFs. And so with the product development process, which has been consistent since the beginning, of course, it's advisor feedback and demand and investor feedback and demand drives a lot of those decisions. But in this particular case, when First Trust does not have the internal capabilities, for example, Canadian fixed income, that's the other product that we launched with Jarislowsky, global equities with emerging market as a component, we will certainly outsource to best-in-class asset managers like Jarislowsky Fraser, like TCW in California, where we've developed a significant and huge relationship in the States, Wellington Management, et cetera. So we thought this was a great opportunity to fill in product gaps within our lineup within Canada. This will be the first maybe, of several products we launched with Jarislowsky. We certainly have intentions to do a lot more, but namely the ones we launched with the Canadian fixed income, global equities, with an emphasis on JF's time-tested investment philosophy and ESG framework, extremely resonated with what we were trying to accomplish. So we are also, in terms of a partnership with JF, extremely aligned in terms of our approach of servicing and really supporting the investment professional, whether it be an institution or investment advisor. We provide these clients with world-class research, practice management, as I mentioned, and great relevant products. So something JF, we believe, has done in Canada for the last 60 years, and now part of one of Canada's largest bank in Scotia. So again, I'd like to thank you, Neo, and Mark and his team for the partnership that we just incepted.
Absolute pleasure. Mark, you've been with Jarislowsky for quite some time, obviously, and you highlighted it a bit in the intro. ESG's been a factor and a lens, I'm sure, in a long standing part of your dialogue. And obviously, you've got an investment committee focused on this space. While it is perhaps new in thematics to the retail investor, it's clearly not a new way of thinking for you. Can you give us a bit of a primer there on what has led, obviously, to the work you're doing with First Trust, and give us a bit of a view on how you and the firm think about ESG?
Yeah, no, it's true. I mean, one of the things I didn't mention earlier was that our founder, Stephen Jarislowsky, was the co-founder of the Canadian Coalition for Good Governance back in 2002. And so this really has been something that's been part of the firm's DNA for sort of long before the ESG acronym was more popularly coined. And if you think about, again, just sort of going back to our typical investment horizon being 7 to 10 years, we absolutely care a lot about ESG risks, right? Like, for example, a technology company that's abusing its monopoly power, that absolutely poses a significant risk to future cash flows, maybe 3, 5, 7 years into the future. If we were just investing, to make the next quarter and get out, then it wouldn't matter, right? But that's not us. We're really focused on identifying and characterizing the resiliency and the risks to corporate cash flows 3, 5, 7 years out. So, I guess that brings me to sort of one of the main points I like to make is that we're really talking about ESG analysis, not ESG investing, right? So to us, this is an approach. It's not a product. And, an analogy for that would be sort of to say that it's something quite similar to a tool like Porter's 5 Forces that a fundamental investor can use to better characterize the quality and resiliency of the businesses that they're making investments in, right? So, yeah, to unpack it a little bit, like the first letter in the acronym is E, and that obviously stands for environment, but we always say that's just the tip of the iceberg, right? On the one hand, you've got the public policy drivers like climate change, water scarcity, pollution. But of course, for us, we're really focused on identifying the business value drivers. And, for example, like an ESG lens can certainly help highlight, how a company like, say, Pepsi or Nestle is dealing with potential water scarcity risks in the future in their supply chains. On the flip side, it can also help highlight the opportunities that exist in the global engineering sector related to water stewardship projects. The next element of ESG is the S, right, which obviously stands for social, but of course, we're also talking about things like health and safety, diversity and inclusion, regulator relations, and so on. And then finally, G is sort of the last letter in the acronym, stands for governance. We like to say that governance sort of cuts across everything. To us, it's really about sort of creating those positive feedback loops to foster a culture that helps achieve the corporate mission, risk management, accountability. So we're really looking at everything from, board independence to capital allocation track records to compensation structures. And so maybe a good example that, I think that sort of helps to tie all that together is the case of a European specialty chemicals company that we had been researching and looking at for a period of time, and really admired, among other things, their sort of leading edge innovation and sustainability solutions in the construction and automotive sectors. But we were on the sidelines due to some concerns around governance. And it was really that the resolution to some of those governance concerns, including the consolidation into a single class share structure with equal votes, that really kind of paved the way for us to initiate that investment back in 2018. And then, 3 years later, we've watched as the multiple on that stock has gone from 16 times up to 21 times, while many of its peers have sort of stayed stuck in the same range as they were previously. And we attribute that, at least in part, to the market's growing appreciation for their leading ESG capabilities. For example, just this year, they announced a couple of really innovative solutions for low carbon and even net zero cement in the construction industry. And the market's sort of growing appreciation for what that means for future growth and margins.
That's fascinating. It really is just, listening to you talk about your own approach towards it and the way perhaps our investors should grow to think about ESG. It's not about a particular segment or part of the business. It truly is a top-down, horizontal, almost fundamental look at the organization and how all of these things contribute to the broader future prospects of the organization. Carl, you're working a lot with advisors. We've heard a bit from Mark now on how them and Jarislowsky are thinking about ESG from an asset management perspective. You're speaking with advisors. You mentioned at the onset, obviously, you're reacting and responding to demand within the investment community. Tell us a bit what you've heard, how advisors are thinking about this, how they're looking at placing this into their portfolios. Give us a bit of a lens on the conversation for you.
Yeah, and just like my background, it's been such an interesting period. We've all been on these calls and listened to different perspectives. You watch it on TV, but I think the first half of 2021 will be remembered for two kind of very structural shifts we're seeing in the marketplace. The first, really, I feel that's capturing a lot of the headlines is the meme stocks phenomenon, the army of retail investors that have just piled into these bankrupt companies and heavily shorted companies. Certainly not companies I think JF would fit JF's criteria for 7 to 10 years. But on the other side, we have seen an inflection point now with ESG flows. I think we've heard about ESG for years. The first product here in Canada launched in the 2000s, the Jarislowsky Index. And so there was always a question whether there would be outperformance, whether it would actually gain traction. This year, we have seen a significant uptake, not just in products launched by competitors trying to fill the need. And you can tell with the ETF industry, especially in Canada, how reactive, how innovative we are to get ahead of trends. And you can see in the product development launches that have year to date, but you also see it in the flows. You look globally, over the last 2 years, flows have increased by more than 4x. And then you look at places like Europe, for example, we're actually seeing ESG flows outpace traditional fund flows for the first time. And that's really, given how the government has structured investing in Europe, it's a little bit different as they've incorporated certain policy to encourage that type of investing. But, when talking to several of the advisors, the analysts, they're like, well, why is this happening? Well, I think there's a bit of a phenomenon for both trends. One being the public opinion against the establishment. You know, a public establishment, when it comes to seeing it with a lot of social issues, but it's like the establishment taking advantage of underprivileged, and you have this whole phenomenon about leaving environmental devastation. So now you have an investor cohort that would like to do good by investing and supporting those companies. For us, the question really when we brought this product and whether advisors would resonate with it is really been, do you do it in a passive framework? You know, our competitors have gone that route, or do you do it in an actively managed framework? And like you just mentioned, that whole process has been embedded within JF for over 60 years. So it's nothing new. It's just like Mark said, it's just being highlighted a little bit more. But when you invest in an index, you are taking all the public securities and using very strict criteria. So it's kind of like going shopping and having a list, and you're going to have to pick up every item on that list. Now, there could be situations, though, where companies within the index might not be behaving appropriately, or there's more information that comes towards that you're saying this doesn't really fit your values. An index doesn't screen that out. Whereas in an active managed framework, like we've done with JF, they can take that position down to zero. The other conversation, you know, what was important to us is that when you take a look at conversations, of course, because some of the larger asset managers have so many assets, they can have conversations with companies and try to affect change that way. But it's to me that's not like an active manager who's engaging and talking and really trying to incorporate certain business practices in order to fall in line. And a lot of what Mark's team does, it really falls into that camp. One other area, I just want to make a distinction with ESG because it's really all over the place in terms of definition yet. So that's still finding its way out. There's different types, I feel, and one I'd like to highlight is, because First Trust has gone down this route, is more thematic environmental impact ETFs. So Mark in his first comments mentioned water. There's water ETFs. First Trust here in Canada launched green energy, but there's several other products there. But what I would say is that these specific trends, you know, hyper focused on a particular secular growth area, really is democratized investments for Canadians and investors worldwide. So we think there's more choice in that area. You just need to understand like where these fit in the portfolio, and Mark and his team could talk about that.
I love it. And you know, you raise a really interesting point around the data itself, and I think that that's one of the things that in the early days when this started becoming a bit more discussed in kind of the public lens. Well, how do you go and find, secure, keep track of, and manage and maintain that data over time? And you know, I'd say this, you know, probably not surprising, but as Exchange, obviously, we're certainly interested and keenly focused on that kind of disclosure, and how do we kind of make that framework easier over time for managers to work with, for companies to comply with. And I'm sure over time, perhaps a few follow-on discussions for us to have together, but how we can build that bridge and make it something bigger in due course. But maybe, you know, Mark, putting it on you, you know, data is critical, obviously, to making this successful. How are the team, are you collecting it, managing it, maintaining it moving forward? What's unique to your approach?
Yeah. So first, it's done like within JF. It's done by the analysts who cover the companies. So we talk about ESG and F, you know, environmental, social governance, and financial analysis, right? So the counterpoint to that is you know, it's not outsourced. It's not hived off into a separate group or separate function. And you know, we think that that's made possible by the fact that we have one firm with a single unified high quality investment philosophy and one global research team that, you know, collectively works to build the portfolios on a weekly and daily basis. So, you know, what's the value in that? I think there's sort of three things. Like, number one is we really think that our analysts, often who have followed industries and companies for decades, if not years, are really like know the companies the best, and humbly, like, we think their knowledge of their specific companies is as good as anybody's. And so, you know, we think they're in the best position to judge the likely financial materiality of ESG data. So if you talk about sort of extracting the potential alpha that exists there from the sort of disagreement or incongruity in ESG data that exists in the marketplace. That's one of the key factors. And the second thing is just the fact that doing it ourselves allows us, and enables us to form differentiated views of ESG, but also differentiated investment theses. And one example on that front would actually be the case of Costco, where when we were first investing in them, Costco was one of the companies that actually didn't have a great ESG rating. And the reality was just that, they run the company in a very focused way and don't really put much money towards producing glossy reports. And in particular, didn't produce a CSR report at the time. And so the data wasn't out there for the ratings providers to give them a good score. On the flip side, though, we actually saw their approach to human capital management and labor relations, so sort of one of the key sort of S factors, as core to the investment thesis. And what I mean by that is that if you think about the way Costco makes money, they don't do so like the majority of their profit comes from membership fees, and so membership happiness and renewal is a key driver to their business value. They see having engaged, happy, helpful employees as core to driving membership happiness and renewal, and all of that being a virtuous cycle. So they were one of the first, retailers in the U.S. to sort of embrace the living wage concept, paying well above industry wages, providing excellent healthcare and benefits packages, all with the effort to sort of drive that sort of core brand promise that I just talked about. So, that's a good example where if we just relied on outsourced data, we would have probably not invested them or invested them to a lesser extent than we did. The other element, and I think Carl talked on this, is sort of the ability to affect change. So, when we go into a company, management, values the fact that we're long-term and knows that they're sitting across the table from the investment decision maker. So when we raise ESG issues, we think we have, potentially a greater potential to affect change. And one of the recent examples of that in the global portfolio was the case of a Japanese sort of industrial technology company where, again, actually, this was a company that on one of the major global ESG ratings platforms was rated sort of their bottom rung due to governance standards and structures that didn't align with sort of Western best practices. We made the decision to invest and engage, thinking that we could help them make progress. So over a period of years, we talked to them about changing their auditor to a larger global auditing company. We talked to them about increasing or adding independent members to the board. We talked to them about adding additional KPIs to management compensation. And then finally, we talked to them about increasing investor access to senior and mid-level management. And so last spring in 2020, they did make progress on several of those things. They made some changes to the board, including new independent members, and they revised their comp plan. And then interestingly, last fall, we started to see some of the ESG ratings providers upgrade their assessment of them. So positive momentum there. And I think it's a good example sort of where you can also invest, engage, make progress, and have that all be a very sort of positive and rewarding experience for our clients and investors as well. All that said, though, like we're obviously, we're not content to just sort of sit on our heels. We're always sort of continuously trying to improve upon and make our processes for identifying decision useful ESG data more robust. And so over the years, we have developed some proprietary tools to help us do that. The first thing was a business practice scorecard. So every company that we write up and put in the portfolios, part of the research report includes what we call a business practice scorecard, which includes a number of traditional sort of financial indicators of quality like R&D and ROIC, but also a number of ES&G indicators of quality. So things like emissions management, emissions trend, diversity statistics, et cetera. And then more recently, we've been filling out and completing what we call our materiality database, which is rooted in the Sustainable Accounting Standards Board, or SASB, industry-specific definitions of materiality. And so that's just meant to go through, ask each of our analysts, which are the most likely to be financially material ESG issues for each of the specific companies that we own, and then please provide your analysis and assessment on those things. So those are all just sort of tools we're working on internally to continue to improve upon the way we do things.
Actually, a quick follow-on question, and you touched on it briefly, but it came in from the audience as well while you were chatting, Mark. Does JF take any exclusionary screening approaches in your investment philosophy? You know, the things I think we commonly hear about around fossil fuels, gambling, weapons, those are kind of the face value, easy things to screen out for, or is it more about, you know, a weighted approach, balancing each of those factors together more broadly?
We have about $5 billion in assets under management that employs a variety of different sort of mission or values-based screening parameters. And so what we say is we take a bespoke approach to that. We tend to find clients have different priorities, and we'll work with them to sort of tailor the portfolio to sort of what helps them. What I would say though is you generally do find, you know, I would say low to often no representation in some of the, you know, some of those sort of more classic sort of high controversial SRI areas like tobacco or weapons and things like that.
Gotcha. Thank you very much. You know, Carl, maybe pass the mic back to you. And we've got this pretty incredible package and a ton of information that's kind of been unleashed amongst the crowd today. Obviously, you've got a phenomenal partner here. There's a history and a track record attached to it, and obviously paired with First Trust as a global ETF powerhouse, delivering that active and passive solution out to the street. These new mandates are active, you know, in a few moments or less, just because we're managing time for today. But talk to us a bit about the differences, why you see this as an important and overall part of your asset management solution for the street.
And that's goes back to our founding in terms of how we view product development, how we can add value. I just feel with the two areas and what Mark had talked about is consistent, not just with equities. So he gave a few equity examples, but their whole team looks at the debt component of the balance sheet as well and apply the same philosophy and processes there as well. And I'd say for global equity, it's a vast landscape. You can add alpha, like First Trust has certainly targeted these areas within the market. So we have 20, say, actively managed ETFs that have a 5-year track record. 13 out of 20 have outperformed their benchmarks in those areas. And we fully believe over long term that will be the case here with these products. So we believe we're targeting the right areas to add value. Fixed income being another, run by Chris Krejcik, also listed on NEO, where, you know, that's an easy bogey historically for active managers. Even since the inception of these products, you can see Chris and his team has added tremendous value just investing in corporates and other areas of the bond benchmark that's not readily available to most investors. So overall, we think we have a great partnership, both distribution, active management. Both our firms are really here to work hard for everyone listening and to support the product and provide you with the necessary information for you to talk to your clients.
Brilliant. It's been an absolutely incredible action-packed 30 minutes. I mean, that's a ton of information that I think our audience has had the chance to hear direct from source, which I know they certainly always appreciate. To our viewers today, you know, you've heard a lot from Carl and Mark, in particular how Jarislowsky Fraser as a global manager has been thinking about ESG for decades, making them one of the credible few with a long-standing belief and conviction that ESG investing can lead to better results. And you've heard some great examples on how they put that to work in industry. And then obviously, Carl, to you and the team at First Trust, you know, bridging that asset management community into the street, giving investors what they need and giving them the ability to vote with their wallet into these types of organizations. The team and I obviously at NEO are very proud to be a part of this collaboration. And gentlemen, thank you both for joining me today and for sharing your thoughts and views with our viewers. To our audience, obviously, we're very grateful for your time and want to be respectful of it. I appreciate you sending through your questions. Encourage you all to reach out to Carl and Mark on your own. You know, they both got pretty present inbox and social media channels. Send those questions through. Please enjoy the balance of your afternoons and stay safe. Carl and Mark, thank you again.
Thank you, Eric.
Thanks, Eric.
My pleasure. And everyone, this is Neo signing off. Thank you for joining us again for another Neo Spotlight.